course, we've got the certified public accountant in this evening, Mr. Robert Hockensmith, the one and only. How are you, sir?
I'm good. Doing those tax returns.
Are you?
Yeah.
Keeping that pencil sharp?
Oh, yeah.
Awesome.
Every few minutes.
All right. And now your smoking hot wife, Devin's going to be joining us later in the show,
yeah.
I believe. So, and she always looks so nice.
She does. She practices a lot when she's alone.
Really? Oh, my. I like that. All right, so we're going to get into some tax stuff. So if anyone wants to call in, maybe if they might have a question, give a call to 480-423-1260, and Dutch will take your call back there. Hey, Dutch, I was going to tell you, it's been a really kind of a busy week this week, I thought, because Monday was President's Day. And what else do we have? We had Fat Tuesday. We're at Barney's Boathouse on remote over there.
Right.
And then, of course, we had Ash Wednesday.
That was the debate day.
Had the
debate day.
GOP debate going on at the Mesa Arts Center. And then, of course, we did the remote last night at Zerona Smoke Shop at 19th Avenue, just north of Greenway Road.
Yeah, and I checked out all those pictures today.
Did
It
you?
just looked like you had too much fun.
That was crazy. You know, I went into that remote thinking, you know, I'm not the type of person, I've really never been into smoke shops. You know, it's just not my thing because I don't smoke, or, you know, I really don't get into cigars. I did years ago a little bit, but I was just surprised that, you know, it was kind of cool. I actually had some fun with it. So, but I don't know, Bob, have you smoked hookah before?
No, never have. No.
I haven't either. I didn't even really know what it was until last night.
I call those bongs.
Bongs, yeah. That's true. But, you know, hookah is like they have different flavors, and it's just like a tobacco, but it's kind of gooey.
Oh, wow.
And you can't just light it with a lighter and smoke it. You got to put these hot coals on top of it to get it to burn down and smoke.
And do you put water in it, or you put water
It's
around
usually like in a big water pipe.
Okay.
Yeah. They don't call it a bong. They call it a water pipe, I believe.
Right, but a hookah is it's like a different type of water pipe, though. It's the octopipe. It's like
It's got big, long
It has
hoses.
hoses.
Yeah.
It's like what the caterpillar from Alice in Wonderland was smoking on.
And they give you a tip,
Okay.
like, it's kind of a social thing. So there'll be a group of people sitting around, and, you know, everyone has their own little tip. So when the hose comes around to you, you know,
Okay.
take a, you know, a drag off it, I guess you would say, right? And then you remove your tip, pass it to the next person. But, I mean, it's kind of cool. I thought it was kind of cool. But the flavors was really good. But if this makes any sense to you guys, we actually smoked flavored rocks. Can you believe that?
Wow.
It was like rocks with flavors in them.
That sounds
How do
fun.
you
I forgot what they
that?
called it now, but we smoked them, and it was really good.
When I was a kid, we used to have Pop Rocks, and that's all I remember is Pop Rocks.
Really?
Yeah.
So I got to tell you, this whole hookah thing, that's like an education right there. I was like,
So now you can say you've smoked the rock.
Right.
I guess so.
Exactly.
That doesn't sound too good.
No,
Dutch.
it doesn't.
No, not at all. Wow. But anyways, got to tell you, Zerona Smoke Shop was a lot more fun than I thought it would be. And plus, everybody over there is really, really nice. The whole staff, really friendly, and the place is kind of busy. People just coming in through the door all the time. I mean, it's kind of a happening place. It really is. So, but hey, let's get into maybe a little bit of tax talk. Now, Dutch, I don't know if you file taxes or not, but you know, yeah, I don't know. I'm just asking. But you know, Kathy heard something interesting on the news, I believe, and I thought it sounded kind of interesting. I wanted to ask Bob about it. You want to mention it, Kathy? What it was about?
Well, it said something like there's like $1 billion of unclaimed taxes out there.
Right.
And those that didn't file their 2008, they have a deadline.
Right.
So if you didn't do that, and they said the average is like $600,
Right.
is it gone
What happens
after
is,
April 17th or something?
I think that's what they were saying, right?
Yeah,
think.
what happens is the taxpayer has literally 3 years to file their tax return and get the refund. Some people will actually say, I haven't filed returns in a couple of years, but I know I have a refund, so I'm not going to worry about it. And they think that they can just file later on and get the refund, but there's a deadline by which the government will actually give you the refund even if you're entitled to it. If you file a tax return 3 years or longer after you're supposed to file it, the IRS will actually keep your refund. They won't give it to you. And so some people go, well, I owe taxes this year, but I know I have a refund for the last 2 years, so they'll net together. No, they won't, because you lose that extra refund from the past 3 years.
But what if you owe them money? Do you have to pay?
Oh, yeah. You have to pay plus penalties, plus
There you
interest.
go. Okay.
Yeah.
Wow.
It gets pretty nasty.
Now, what happens if you do like an extension and you did a couple $1,000s just to say, hey, and then you don't file? Do you lose that too?
Yes, you do. Yeah.
Wow.
Yeah.
After how long you're saying?
3 years.
3 years.
After 3 years from the date that it was due or the extension that you filed.
Okay.
Yeah.
Very interesting. I didn't know that went on.
Oh, yeah. And here's the other thing. And this is amazing. I read this on the IRS website on a regular basis. The IRS actually does not send out over $100 million in refunds because they can't contact the taxpayer. The taxpayer is not giving them an address to
Because of
contact.
address.
Yeah.
Wow.
People just drop off the radar, don't
Yeah,
they?
they just go off the grid, and the IRS is going, look, I've got money for you. And they're going, well, sorry, we don't want it. Or by not communicating, they're effectively saying they don't want the money. And instead of that money going to the state unclaimed property coffers, which is what would happen inside the state.
That's what I was thinking. Yeah, all that has to be deposited,
Right.
being held by the state.
That's true if the money is owed by an employer or if the state owes you money. But if the federal government owes you money, it does not go to the state unclaimed property department. It goes to the Department of Treasury, and Treasury keeps it.
Wow.
It
See,
said
that-
$1 billion.
$1 billion for 2000, and that's 2008.
Right, 8 only.
Yeah.
See, that right there, Bob, is something the state of Arizona should change. We should say, hey, forget you federal government. If people have money coming, hey, deposit that here at the state.
Well,
You know what I mean? Seriously.
They can't, though, because it's federal money. It's not state money, so they can't do that.
Yeah.
Yeah. But, the state of Arizona and every state in the union actually has their own unclaimed property laws that do require state refunds to go into a pot for people. And
Okay.
instead of the 3-year mark for federal refunds, it's a 4-year statute of limitations for state refunds.
Interesting. So everybody listening, if you got some money coming back, you need to get filed by April 17th.
April 17th, 2012, or you lose your refund for 2008 forever.
Wow.
Yeah.
That is some bad news.
Yeah.
I bet that's some really bad news for a lot of people.
Well, think
that
about
got
the
behind.
person that, Now, here's the other thing. Let's say you were in the military. In 2008, you're over in Afghanistan, or you're in Iraq, or you're somewhere overseas.
Yeah.
You're actually given additional time to file that return, but you have to be able to prove that you were overseas in a combat zone to get that additional time.
Gotcha. That makes sense.
Yeah.
Definitely want to give those guys more time.
Absolutely.
That's for sure. I do want to ask you, in reference to my first question for you, is something that's going on in my life, possibly, is that we have a rental house.
Okay.
That we lived in the house years ago for about 4 years.
Okay.
But then we moved out and rented it out. Now, recently, a tenant moved out. So we're saying, why don't we just sell this?
Okay.
Right? Even though the market's down,
Right.
we had it so long that if we sold it, we'd still make money. Plus, I've been depreciating the rental.
There you go.
So I told Kathy, I go, we'll have a capital gain hit on
Correct.
it if
Correct.
we cash out on it now.
Correct.
So what would be our hit on that? Is it 15% now?
Actually, if it's rental property, there is a different capital gains rates. There are actually 6 different capital gains rates.
Really?
And it depends on what it is you're trying to sell for a profit. Rental property doesn't get the 15% capital gains rate that normal items do. There's 2 parts of rental property capital gains. You have to recapture the depreciation that you've been taking in the past, and that recaptured depreciation, whatever it may be, is taxed at 25% capital gains, not 15.
Oh, so we may be hit with the
25%
25.
tax on the depreciation portion that you recapture.
okay.
And then if there's any additional profit after that, which in your case there may not be because you still may be selling at a loss,
Yeah.
then you won't have any capital gains, you'll have a capital loss.
Gotcha. Now, even though we lived in the house for 4 years, it was so long ago. I think you have to live in it. Is it 2 out of the last so many?
2 out of the last 5.
Okay.
But-
so I told her, we could move back in it for a couple of years to
Right.
try to avoid that tax, maybe.
Actually,
right?
you won't avoid the tax, you'll just reduce it because you'll still have capital gains for the period that you depreciated it. You don't get away from that.
Oh, you always got to recover that.
Yeah.
Gotcha.
Yeah, that you don't escape that.
Very interesting.
Now, the only way that you can escape that, well, there used to be in the past, not anymore. But what you could have done in the past is you could have lived there for 2 years, sold it, taken the $500,000 exemption,
Yes.
and not have to worry about the tax.
Right.
But if you ever use that property for business purposes, and rental is considered a business, then you're always going to have that depreciation recapture.
Gotcha. But only on the amount that you actually depreciated.
Correct.
Okay.
And only if you sell the house at a profit.
Gotcha. Hey, Bob, we got a caller in. We have Mike with Mesa. He says, looks like he hasn't filed in years. Mike, are you on the air with us?
Hi, how you doing, guys?
Good, good. What's going on with you, Mike? You haven't filed? What's the story?
Oh, well, of course, my own fault. I'm the dummy.
Yeah.
But I've been out here in Arizona for 10 years, and I'm one of these freelance guys, that like does corporate audiovisual setup stuff.
Yeah.
So I never made enough any year, really. Everybody told me, you're not making enough money because my summers are dead and the holidays are dead. So I haven't really been on staff. So I don't make enough money. But I didn't file. So, yeah, I'm in big trouble.
Well, I think you can get this cleared up. We'll ask Bob, but tell us how many...
luckily, 60,000 Americans recently got jobs. This is 60,000 new IRS agents. Bama hired.
That's right.
And they got me for 2002 and 2003. And they say that I owe them 17 G's. And there ain't no way. There ain't no way. They nailed me with 10 years of fines and everything and all of this. And wow. I got a check the other day. It was supposed to, be like $1,900. And the check was $350, and I had no idea out of it. Just came out of
Mike,
nowhere.
let me ask you this real quick. What was the last year you filed?
Not since I've been out here for 10 years. Not since I came out here from Chicago.
Okay.
Because I didn't think I made enough money in a year.
Yeah.
And even a couple of years, I was on staff, and they take all the taxes out. So I figured, let them worry about it. I'm the dummy. I know.
Gotcha. So what's your question? Now, hold on. Now, what's your question for the CPA?
Well, how can I stop these guys from taking all of my money out? And who can I call to get all this junk? To figure out what I actually own.
Mike,
apparently they can take the last 10 years of my money, but I can only go back 3 years.
Right. Hey, Mike, we got to clear the line. We're going to have the CPA answer, so stay tuned and listen for your answer.
Hey, I appreciate you guys. Hey, you got a nice show.
You bet. Thank you.
All right. So, Mike, here's the story. Until you file a tax return, if you're required to, that's the secret, are you required to? And I'll answer that in a second. If you don't file a tax return, the statute of limitations remains open for the rest of your life. So you could be 90 years old in a nursing home, and they could come after you and make you file a tax return and take whatever you may have at that time.
Oh, my.
Now, the question is, are you required to file? And the answer is this. If you're self-employed, you said you're a freelance guy, so I'm not sure if you were getting a W-2 or if you were actually making money on your own as a 1099 freelance employer, self-employed. If you're self-employed and you earn more than $400 a year as self-employed, you're required to file a tax return. Now, I didn't say you're required to pay taxes. I said you're required to file a tax return. And so that's the key. You have to decide whether or not you earned enough to require you to file. On the other hand, if you were an employee earning a W-2, then we have to look at your age, your marital status, do you have any kids or parents as dependents, and then that is going to change every year. So typically, on average, if you earn less than about $8,000 a year and you're a single person, then you probably won't have to file if you're a W-2 employee and you had no taxes withheld. So there's pretty much a disjointed answer to a very long question.
Yeah, that gets messy, some of that stuff, doesn't it?
Quite a bit, yeah.
Wow.
Yeah.
Don't get in that situation.
Right.
Even though I do hear there's a lot of people that haven't filed for years, and it's kind of messy out there. But
yeah.
All right. Hey, Bob, we got to take a quick break. Let's do that. We'll be back with CPA Robert Hockensmith on After Hours right after this.
You're listening to NBC 1260.
American First Financial can provide you with a quick and easy auto title or registration loan in less than 30 minutes. We have multiple loan programs even if you're not currently working or have bad credit. We have a no-hassle loan program where all you need is your title, the vehicle, and your ID. Call one of our offices today for more information. We can loan up to 50% of the value of your vehicle, and your vehicle can be anything from a car, motorcycle, truck, van, ATV, classic car, or commercial vehicle. needs to be paid off with your Arizona title in your name, or if you're still making payments, we can do a small registration loan. We're located in North Phoenix and in Mesa. You can go to our website at aztitleloans.com, or you can call our office at 602-862-1000.
Lose 4 to 10 pounds this week, 25 to 45 pounds in 12 weeks. No boring low-calorie diets and no aerobics. See over 50 success stories at LarryReynolds.com. Then call for a free consultation, 602-667-0886. You must build muscle while burning fat to keep it off for good. My personal training programs are fun, easy, and affordable. Call 602-667-0886 now. Mention this ad for 1 week free with any program. Call 602-667-0886 now.
Do you have equity in your home? Well, neither do we. In an ever-changing real estate market, whether you're buying, selling, or renting, choosing the right realtor and strategy is paramount. Visit us at myhomegroup.com. That's myhomegroup.com, and search the MLS for free. Get your search on at myhomegroup.com, or call us at 480-685-2760. That's 480-685-2760. myhomegroup.com.
The Rona Smoke Shop has been the Valley's preferred smoke shop since 2008. We offer great service, quality of product, and endless items to choose from. Yes, we are the biggest store of our kind in Arizona. Rona Smoke and Novelty is located at 1907 West Waltan Lane. It's on the northwest corner of 19th Avenue and Greenway in Phoenix, next to Chino Bandito. Find us on the web at ZeronaSmokeShopAZ.com, or you can call us at 602-795-2599. Say you heard about us on NBC 96.1 FM for your free pipe. Zerona Smoke Shop for all your smoking needs.
You've got internet?
Begin the download.
You've got us.
Popular radio entertainment for the masses.
You can find us at NBC1260.com.
All right, welcome back to After Hours Live Hot Talk Radio. And, of course, we had the smoking hot F Hockensmith join us in studio now.
Hi.
Devin, how are you tonight?
I'm awesome.
Awesome.
Thank you.
And for everybody that wants to go to our website at NBC1260.com, click watch, and you will see the video feed live here in the studio. And you will see some of the women we have in here this evening that are quite easy on the eyes, I must say.
Oh, thanks. And, you know, I hear I practice a lot when I'm alone. I don't know what you're talking
Where
about.
Where did you hear that at? Where did you hear it?
On my way in.
Oh.
Yeah, I don't know what you're talking about.
My. That's funny. All right. Hey, Bob, I had a question that came in. And by the way, if someone wants to call in for a quick question, 480-423-1260 is the call-in number. Someone asked, making $125,000 a year. They're unsure. What do they pay for Arizona taxes making $125,000 a year?
A lot. No, that's just the gross
for Arizona.
Right. That's just the gross income. Then you have to take away deductions, find out if they have children or not. You know, are they married? But the average taxpayer in Arizona pays tax at the rate of about 3.5% of your gross income. 3.5%.
So it costs each person, depending on what you make, it could cost you a few $1,000 to live here.
Yeah, I mean the minimum tax bracket in Arizona is 3%. The highest tax bracket is 5%. The average is about 3.5%.
Gotcha.
Yeah.
So that's one reason when people retire, they may look at Nevada or some of those states that don't have a state income tax, if they still have decent income, I assume.
Absolutely. You know, you've got Florida, you've got Texas, Washington State, Nevada. These are states that do not have state taxes. And in fact, recently, Nevada was determined to be providing the most disposable income to a taxpayer because the tax brackets are so low. There's zero income tax. You do have sales tax, but it's less than what we pay in Arizona.
Yeah.
And the federal taxes, of course, are the same. So you end up with more disposable income by living in Nevada.
Gotcha. All right. And then the next question is that I had for you was this payroll tax. They did extend that, but it wasn't only for a couple months, I guess? Or what's the story with that?
The payroll taxes, which is like a 2% cut for employees, was extended until February, and then just recently they actually extended it further out until November of this year. So it's good until November, and hopefully we'll see that it's after the election that they're going to make a determination as to whether they're going to follow it to the end of the year, which chances are they will. there's a 98% chance they're going to follow it to the end of the year and make changes as of January 1st.
Okay, something I'm not clear on, Bob, is this: when I hear the politicians talk about the payroll tax, what does that mean exactly? Because to me, as an employer, I know we do withholding.
Right.
Are they talking about our income tax, or are they talking about those other?
They're actually talking about the FICA tax. The
Okay.
FICA and the Medicare tax, or
Yes.
that's like FICA and Medicare, which each employee pays 7.65%.
Yes.
And the employer matches that for 7.65%. The employees got a cut. They got a 2% reduction in that. So now
The employer did not?
The employer did not.
Okay.
The employees did, but the employer did not. And that was done on purpose so that the employees would get a bigger paycheck and then hopefully go out and take that and spend that money, and the economy would grow from that money multiplier.
Gotcha. See, now I'm clear on that.
Yeah.
Because when they were saying payroll, I'm thinking,
yeah,
what is this?
Right.
What is that exactly?
Yeah, that 2% cut was just for the employees, not the employer.
Are they going to keep that going, you think?
Yeah, they're going to keep that going until November for sure. Chances are it's going to follow to the end of the year, and then we're not sure what's going to happen as of when the new president gets voted in.
Okay. Now, another question that came in was cigarette tax.
Oh, yeah.
Someone says, I pay $65 a carton for my cigarettes.
Yes.
What does this tax money go to?
The oldest tax in the United States is alcohol and tobacco. Those were the first two taxes that were started back in the 1700s.
Before income tax, before anything.
Yeah, long before income tax. But alcohol and tobacco were taxes that the British put on the colonists because they were growing
That's
a commodity.
right. That's right.
And, of course, that's what part of the problem became with the Boston Tea Party and so forth. But that tax has remained even after the United States became a nation in 1776, and it's the oldest tax. And what it is it's effectively called a sin tax. Since the United States helps fund a lot of medical programs, they say that we're going to take the people who actually buy alcohol and tobacco that causes cirrhosis of the liver and lung cancer, and they'll be the ones who end up paying for the medical assistance that the federal government gives states. And that's what that is. It's a sin tax.
It's a sin tax.
They should legalize prostitution.
I
and
agree.
Tax that. It's a lot
Really?
safer,
Well,
right?
you know, it's funny. Are they ever going to tax sex? Maybe you got to keep track
Actually-
of how much you have sex with your wife
Actually-
and keep a log, and then you know what I mean.
I think
Is
the
that
wives
ever
are-
going to happen?
I think the wives are doing that already.
Really?
Yeah, they're keeping track of that.
Oh my!
But don't forget,
Some
now-
guys' tax would be very low, right, Dutch? Is that,
Hey, what the heck?
you see, I'm going to you on that.
Whoa.
You want to be in a high tax bracket
Yeah,
on that
right.
one.
Oh my God. Oh, that's funny. That's great.
Ouch.
So, what does that money go to? Was the question though? That sin tax.
Sin tax?
Does it just go to the general coffers of the state or whatever?
Yeah, it goes to the general coffers of the federal government, not the
Oh,
state
it's a federal
government, but
tax.
It's a federal tax, just like the road tax is a federal tax for gasoline. So the federal government receives this money, and then they decide what they're going to do with that money. It goes to Social Security programs. It goes to state medical programs. It goes to federal medical programs, and that's what they use it for.
Don't
Gotcha.
the states have individual state taxes on tobacco as well?
They do. They do
Yeah.
have a small amount, but it's not as much as the federal tax because the tax is so big from the federal government, the states really can't tax a whole lot of it because they're going to get it from the federal government already.
Okay, because I thought I had heard that Arizona had the highest per pack tobacco tax.
We do.
Well, that's true because now what about the Indians? They sell it over there on the reservation on the other side of Pima Road.
But
a
they
lot
are a
cheaper.
sovereign nation, so they don't charge tax, which is why
They
a lot
don't have
of
to pay
people,
federal, state, or anything. I
Right,
assume.
right. That's why a lot of people will buy their cigarettes from the Indian nation. But technically speaking, they're supposed to now report that on their state tax return when you buy something.
Yeah,
from,
right. Okay. Okay now. All right.
Right.
Oh, geez. I tell you, it never stops. You know what I
No.
mean? Seriously. There was a question that came in. The question is, what entities don't pay tax? Because we know individuals, we pay tax.
Right.
Corporations pay tax.
Right.
Are there any entities, for some reason, that don't pay tax?
Absolutely. In fact, there are about 46 million people in the United States who do not pay tax because they're not earning any income.
Wow.
Yeah.
What's the threshold?
It depends on, are you married or single? Do you
Okay.
have children? If so, how many? You could actually, if you're a married person under the age of 65 and you have 3 kids, you don't have to pay taxes until you earn over $17,000 a year.
Wow.
No taxes.
Wow.
And if all you earn is food stamps, there's no tax on that.
You don't earn food stamps, do you?
Well, you're correct. You don't earn them. If all you receive is food stamps.
That's an entitlement.
Right. That's exactly right. Well, people like to think it's an entitlement. Yeah. But as far as unemployment, because now we've got this 2-year limitation for unemployment, you do, in fact, pay income taxes on unemployment if you go above a certain threshold. So let's say you're earning $17,000 a year unemployment, you're married, you have 3 kids, you won't pay any taxes. The other entities that don't pay taxes are nonprofit organizations, the 501c3s, churches, for instance. They don't pay taxes.
Hey, on that question, I had a guy that ran a church. He was saying they're not a 501c3. Apparently, if you're just a church, you just claim I'm a church, they're not a 501c3. I didn't realize there's a difference in that.
There's different statuses. You can be a 501c4, a 501c3, a 501c2. There's different statuses, and if you're a 501c3, which, by the way, are all listed on the IRS's website. So if somebody says, we are a tax-free organization, we'd like your donation, you can actually look them up on the IRS's website, see if they're legitimate, and then you'll know that the donation that you give them will be tax deductible.
Very nice. Yeah. Very nice. Any other tax or entities that don't pay tax?
Actually, partnerships don't pay taxes, and S corporations don't pay taxes.
Oh, because it flows through.
Right. The owners of the partnerships and the owners of the S corporation pays taxes.
Now, on that note, what if one of the partners doesn't pay their tax? Does that even affect the partnership at all?
No.
Because it just flows right by them.
No. The partner who doesn't pay the tax is an individual, and then he or she is the one that has to pay the piper to the IRS, not the partnership.
So it doesn't corrupt the partnership or the LLC or S Corp or whatever.
No, not at all.
That's good. That's good news.
Yeah, it is good. But what usually happens, Pat, is that if somebody in a partnership or an S corporation gets audited because of the income they've earned from the S corporation or the partnership, typically all the partners or the owners of the S corp will also get audited.
Oh, okay.
Yeah, we're seeing that now in the medical profession. There's a lot of medical groups today where you have 3, 4, 5 doctors together in a partnership, and one doctor will get audited because of something that relates to the partnership. Guaranteed all the other doctors are going to get audited as well.
Wow.
And in fact, the IRS has really picked up the audits on medical professionals. They want extra money for revenues, and doctors typically have extra money, so a lot of people usually try to play games on their tax returns, and this is like easy money for the IRS. Go after the doctors.
Well, clearly, if you're an IRS auditor, you're going where you might be able to get some money, right?
That's right.
Obviously.
That's right.
Yeah.
And doctors,
they like to
medical
get checks stroked to them, and I'm sure they have, if they can collect more than the next guy, they might get a good bonus at the end of the year. I don't know how all that works, but it may be something like that, right? Well, if I'm an IRS auditor and I've collected a lot of money this year, I'm hoping I'm going to get a good Christmas bonus, maybe. I don't know.
They actually don't get paid that way. They get
they don't? They don't get paid on commission or anything?
No. I actually have some friends that work for the IRS. They get paid a flat salary.
Oh, okay. So there's no incentive to try to extract more cash out of anybody.
No, there's no incentive for the agent to do it, but obviously the agent that does a better job in collections is always going to be looked at more favorably, perhaps, than somebody who doesn't do quite a good job.
Gotcha. Hey, Bob, we need to take a quick break. Let's do that. I do want you to give out your website and phone number and location, that sort of thing, before we go.
All right. Website is taxquest.com, TAXQUEST, taxquest.com. Our location is 6232 North 7th Street, Suite 110 in Phoenix, 85014. And our phone number is 602-264-9331.
That's right. You guys are taking new clients?
Taking new clients.
Awesome.
In fact, we have weekly tax tips that are available in writing. And starting May 1st, we'll have weekly 1-minute videos giving you tax tips available on our website.
On your website.
Yeah.
Gotta love that.
Yeah.
Well, hey, I definitely want to get into hearing some of your tax tips because I know you're writing a book and so forth as well. I want to hear a little bit about that. Dutch, take us away. We'll be right back with After Hours.
You're listening to NBC 1260.
The Verona Smoke Shop has been the Valley's preferred smoke shop since 2008. We offer great service, quality of product, and endless items to choose from. Yes, we are the biggest store of our kind in Arizona. The Verona Smoke and Novelty is located at 1907 West Waltan Lane. It's on the northwest corner of 19th Avenue and Greenway in Phoenix, next to Chino Bandito. Find us on the web at ZeronaSmokeShopAZ.com, or you can call us at 602-795-2599. Say you heard about us on NBC 96.1 FM for your free pipe. The Verona Smoke Shop for all your smoking needs.
Hey, you want a piece of me? For the past 10 years, Mamma Mia Brick Oven Pizza has been delivering Phoenix's finest pizza, subs, and pasta right to your home or office. We are located at 40th Street and Indian School Road and 8th Street and Indian School Road, and we specialize in downtown office deliveries. Come in and try our $3.50 lunch special. For only $3.50, 2 slices of our award-winning pizza and a drink all day long. Come on in and see why we've been voted best in Phoenix for the past 7 years. Mamma Mia Pizza was founded in 1980 by New Jersey immigrants Frank G. and his father. We continue our dreams here in Arizona. Come on in for a slice and share a table with a stranger. Mamma Mia Pizza offers takeout, delivery, catering. Come and enjoy the best pizza in town with your family and ours. Mamma Mia Pizza, located on 40th Street and Indian School Road or 8th Street and Indian School Road, 602-50-80-444, or order online at our website, phoenixbestpizza.com. That's www.phoenixbestpizza.com.
Do you have equity in your home? Well, neither do we. In an ever-changing real estate market, whether you're buying, selling, or renting, choosing the right realtor and strategy is paramount. Visit us at myhomegroup.com. That's myhomegroup.com, and search the MLS for free. Get your search on at myhomegroup.com, or call us at 480-685-2760. That's 480-685-2760. myhomegroup.com.
You've got internet?
Begin the download.
You've got us.
Popular radio entertainment for the masses.
You can find us at NBC1260.com.
Welcome back to After Hours. Hey, if you got a quick question for the CPA, 480-423-1260, and Dutch will take your call. Let's see, Bob, I have a question. We've been talking a lot about real estate lately.
Right.
Okay. And
right.
There's been a lot of people obviously underwater, foreclosures, loan mods, short sales, all these things going on.
Right.
People are wondering, how does this affect me tax-wise when I get into one of these situations with a home?
Okay. Big differences now. Number one, if you own the property, and all you did was buy the house, and you borrowed money to buy the house or fix it up, and then you get underwater and you either go do a short sale or have it foreclosed, you're going to file a Form 982, and you will not have to pay taxes on the debt forgiveness that you received because of the foreclosure or the short sale. That's only if you bought the house and you borrowed money to buy it and fix it up. Now, the big problem comes in that when in the early 2000s, when people were refinancing constantly because the property values were going up, and they took the money, paid off their credit cards.
They cashed out to buy cars or whatever.
Buy a car, take a trip, pay off your credit cards. That money becomes taxable income. And that's where people get stung. The second thing that becomes an issue is, you talked earlier about having your house as a rental property. It was a house you lived in, and you turned it into rental property. Well, the minute you turn it into a rental property, you lose the opportunity of that debt forgiveness wash, like I just said, if you own the house, because now you've turned it into a business, and now you have to actually claim that debt forgiveness as extra income. Even if you just bought the house and that was it. But you turned it into rental property, bam, you now have to pay tax on the debt forgiveness.
That's not good. So you can't escape that.
No way to escape that. Well, there is one way to escape that. I apologize. Bankruptcy.
Yeah.
If you file bankruptcy, you will not pay taxes on the debt forgiveness, credit card forgiveness, forgiveness of loans or debt will be charged to taxes.
Now, does the debt forgiveness fall into short sale?
Yes.
What about loan modification, where they just reset the loan or something?
If it's a loan modification, first of all, we know that the banks are not going to change principal. They've already said it outright. We're not going to reduce principal.
Some people have got that, but I guess
that was happening when it was found that the banks did something illegal.
Okay.
If the banks did something illegal, like that robo-signing,
Yeah.
then they were going to reduce some principal, because that was sort of a deterrent for the bank to do the correct thing. But now most banks are not going to do any principal reduction unless it can be found they did something illegal. They're going to simply take the extra principal that wasn't paid because people stopped making payments, and they're going to add it to the back of the loan. And the loan modification is not going to have a tax impact, except that now you're going to have less interest that you paid. So you have a less tax deduction.
Yes.
That's
yes.
all.
Okay. Gotcha. So you got to handle those issues very carefully.
You know,
with this
don't
real
don't
estate.
try to do that by yourself. Call an attorney, call an accountant. Don't try to do that by yourself, because it's a landmine just waiting to be stepped on.
It is. It is. Okay. Now, someone asked a question in reference to their withholding on their paycheck.
Yeah.
Now, should they claim less dependents? I mean, some people are of the mindset apparently to want to have more withheld out of their check.
Right.
Now, which is the right way, or what should be done with that?
Keep this in mind, Pat. The more you claim on your tax W-4, right? The more you claim, the less tax will be withheld. So the more numbers you claim on the W-4, the less tax is going to be withheld and given to the IRS. Now, that's what people would think. They say, wow, that's what I want. But if you claim more than 9 exemptions, your employer is required by law to send that W-4 to the IRS. And then the IRS decides whether or not you're claiming too many exemptions. They'll look at your past returns and say, you've only got 2 kids, why are you claiming 9? You know? And then you have to go and prove that you have a house that allows you to claim 9, or you have other deductions that allow you to claim it. So if you claim more than 9 exemptions on your W-4, know that your employer must send that to the IRS for approval. So the key is, if you want to pay less taxes at the end of the year, then what you want to do is you want to have less taxes taken out.
Gotcha. Okay. I know some people look at that totally different. I've heard people say,
Right.
I mean, I guess they want the government to be their savings account.
But there's no savings, because when you get a refund, you don't get interest.
You don't.
You know, I tell my clients this all the time. I'll tell you what, you give me that $3,000, and I promise to give it back to you at the end of the year.
Yeah, just say you had 1,000 clients give that to you, right?
Oh, yeah.
And you can make some good interest
Wouldn't
on
that. Be great?
Turn it back to them.
$300,000? Wow.
Yeah, I'll hold that for you.
Even at 1%, I'll accept that.
Yeah. That is funny.
Yeah.
All right. Another question. Gifts.
Yes.
How much can we give away now to our, I guess, kids or even anybody?
Anybody,
for that matter?
right. Keep this in mind as well. A lot of people believe that a gift is a tax deduction. It is, but not for income taxes. It's a gift tax deduction or an estate tax deduction.
Okay.
Wealthy people want to give away money to their kids so that when they die, their estate has less money in it. And if their estate has less money, then there's less taxes to pay. But now we have a $5 million per person exemption. So that
$5 million. Has that been increased lately? Or?
Oh yeah, it was $1 million, then it became $5 million.
Okay.
So
okay.
Now a couple, you know, if they have a trust and do it correctly, can actually die leaving $10 million to their kids, and there would be no estate tax.
Nice.
No, they just
so
pay
without
income
getting
tax.
into that, is inheritance tax the same as
Yes.
estate? Okay.
Inheritance tax or the same as estate tax. But to answer your question, what's the amount of a gift that you can give without having to file a gift tax return? The answer is $13,000.
$13,000.
Yes. You can give $13,000 to each of your children. And then
Now
Kathy
can I?
give
Okay, so I
$13,000
can,
to
and
each.
then she can.
Right. So the two of you together can give $26,000 to anybody you want to reduce your estate, so that when you pass, your estate then is a smaller amount and goes to the kids without any tax.
Well, I know what I'm asking for this Christmas.
Right.
You do? Oh, nice. Now, could Devin give me a $13,000 gift?
Absolutely.
And then give Kathy one and you one?
That's right.
Yeah.
Well, she
That's
can't
just
give
good.
me one because
you're the married.
Yeah, the married couple have unlimited gifts.
Okay.
She could
She'd have to give it to
That's
Dutch.
right.
Yeah.
Unlimited
Okay.
gifts.
Right.
So technically, if you want to give $1 million away, if you had a lot of people to give it to, you could give them each $13,000, and
All the time.
Nothing
No big deal, right? You can reduce your estate. That's what Warren Buffett's doing. That's what Bill Gates is doing. They're actually saying they're going to give away 95% of their estate before they die.
Can I have some?
Yeah. You got to better email them. You know,
I'm going to get right on that.
Yeah, exactly.
If you remember history, Andrew Carnegie did that too, which is why there's so many Carnegie libraries around the United States, and Carnegie parks.
Okay, I had a question come in. They want to know what does marriage penalty mean? Why are they penalized for being married?
Used to be. It used to be that when we did tax returns, the people.
I mean, we all know it's a penalty, but
well, you can get put in the penalty box.
Okay.
He's going right there.
Yeah. And by the way, it's not 2 minutes.
I got that from Dutch. I'm sorry.
What? Quit blaming me for stuff.
Right. Penalty box in marriage is more like 2 weeks, not 2 months. Or
if you're lucky.
Yeah. It used to be that if two people got married and filed a tax return, a joint tax return, they would be taxed higher than if they were two single people earning the exact same amount. That was stopped. Actually, that was taken away back in Clinton's administration. But there is a marriage penalty if you are a senior citizen earning Social Security and you're married and still working. That is a marriage penalty that has not been addressed in Congress. Example, a single person who is a senior citizen earning Social Security can make up to $25,000 before they have to pay taxes on their Social Security earnings. Right? If you are a married couple, that means that you should be able to earn $50,000 before you pay taxes on Social Security. But the law says if you earn more than $32,000 as a married couple, you pay taxes on your Social Security benefits. Not $50,000, but $32,000. So that means there still is a marriage penalty for senior citizens earning Social Security and still working as well.
Wow. Amazing. All right. Got a question. This is my question, I should say.
Sure.
What are just some average tax breaks that the average person might want to take?
If you have children under the age of 17, you actually get a tax break. If your income is under $150,000 and you have kids under the age of 17, you get a tax credit of $1,000 per child every year until they hit 17.
Okay. You got to be under the 150 for the household.
Yeah. Household has to be under 150,000. Right?
Gotcha.
If it's over 150,000 but under 200,000, it gets phased out. You slowly get less and less.
Gotcha. Yeah. Wow. So over 150, you just lose that. That goes away.
No, over 200,000.
Or over 200.
Over 200,000, you lose it. Yeah.
Gotcha.
Another tax break is if you have little children, daycare. You can get a tax credit. Now, a credit's better than a deduction because a credit reduces your tax, where a deduction reduces your income by which you're taxed. So $1 in credit is equal to $3 in deductions. So credits are great.
Wow.
So if you have daycare expenses, you can get a tax credit of up to about $600 for two or more children.
Wow. Interesting.
Yeah. That's a pretty good one.
Now, I was going to ask you, what do you foresee? Where's the tax stuff headed? I mean, are we any big changes you think coming in? I mean, a lot of people are saying, there's certain things outdated or
oh yeah, there's a lot of things that should be changed.
Anything that you think's going to happen, or are we just going to be the status quo for a while?
Well, I'll tell you, if you look at what's happened in the rest of the world, Europe does not have a tax deduction for home mortgage interest. Now, if you're a business, you get a tax deduction for interest on your property. But if you're a homeowner, there is no tax deduction in Europe, and that's why a lot of people don't have a lot of mortgages. In America, we have 30 and 40-year mortgages, and we get tax deductions for it. I could see possibly down the road home mortgage interest being limited or being reduced or even being eliminated, because that will help people get their houses paid off faster because there's no benefit, and basically have more money saved through the house.
Sure. What's the average person pay a year for mortgage interest, roughly?
The average home in the United States is about $165,000 to $170,000.
Okay.
And you figure 1% of that is going to be your monthly payment. So that means, about $1,600, $1,700 a month is the payment.
Yeah.
And you take that times 12, and you're looking at some interest of about 80 to 90% the first 7 years.
Yeah.
So that means that people are paying, $15,000 a year or something like that.
Okay. And then what's the percentage of that they can deduct?
They get to deduct all of it.
Oh, they get to deduct.
They do
all
get to
of
deduct
that.
all of that.
Okay,
yeah.
I thought it was a percentage of that.
Well, it's they get to deduct all of that.
Okay.
And the tax savings is a percentage of that deduction.
Okay.
Yeah. So it's how they do it. Just like your tax deduction for your license plates.
Okay. So
A
if
lot
they
of people don't know
eliminated
about
that, what's the net effect of that?
People would pay anywhere from $5,000 to $8,000 more in taxes a year.
Ah.
Yeah.
That's quite a bit.
Quite a bit.
Wow.
Yeah, quite a bit. That's a vacation for most families.
Yeah, no kidding.
That would kill me because, I got to deduct $11,000 off of my interest this year.
So take a third of that, which is about $3,000, and that's how much more in tax you'd pay.
I better go back to renting.
But here's the good part. The good part of that is this. You're going to pay your house off far faster because you get no benefit. Remember when car interest was deductible and credit card interest was deductible, right?
Yeah.
Before 1986? And everybody borrowed money on their cars and their credit cards and took the tax deduction. The minute we lost the tax deduction, they paid off the cars as fast as they could. They paid off the credit cards as quickly as they could because there was no tax deduction for it. And that means that you have more money in your pocket.
But how am I going to pay it off any faster? Is it just because I'm going to be more motivated?
Exactly.
Oh.
Yeah.
That's true. The average person should take that savings and just put it toward their principal every year.
Or they'd be less likely to want to refinance the house.
That's
because
true.
Now they see that they're going to get no benefit for it, so why should I refinance it?
Well, see, that's a good question because over the years I hear people refining their homes, right? Pulling cash out, but they're re-obligating themselves for a whole nother 30 years and so forth. I mean, what does this make sense?
Well, economically, it does not make sense. But usually when it comes to money, a lot of people don't use common sense or economics. They use emotion. When people spend money, it's typically because of emotional reasons.
Sure. Yeah. That's true. Now, sometimes they say, well, my payment's the same or lower.
Right.
But, I mean, when you get out for another 30 years of debt.
Yeah. Your payment's the same or lower, but, your kids will be dead before it's paid off.
Yeah. Okay. Now, another question for you is estate planning tax tips. Is there any, big deal or a big tip on that?
We just talked about the $5 million per person exemption for estate taxes. Well, that means that two people would be allowed to leave $10 million. But in order for that to happen, and of course we're assuming here that people have more than $5 million to give to their kids
I
or
hope
somebody,
so.
right?
Yeah.
In order for that to happen, you have to have a trust. Because if you don't have a trust, the minute that somebody dies, boom, you lose that $5 million exemption. But if a married couple have a family trust or a living trust prepared, then 5 of that $10 million carries over into the trust that the deceased person leaves behind so that the survivor, the husband or wife who survives, gets to actually give to the kids an extra $5 million, tax-free.
Very nice.
Yeah.
Very nice.
So you want to have a trust is what you want to have rather than a will.
What now, is that a family trust?
Yes.
Okay.
Living trust, revocable trust, family trust, they're all the same.
Gotcha.
AB trust.
Yeah. All right. So they just need to see somebody in reference to setting that up. And
I hear so many of my clients asking, what's better, a will or a trust? Wills don't take effect until you're already dead, right? And powers of attorney are no good once you're dead. So if you have a power of attorney for your mom, for instance, you're taking care of your mom, and you're on, you're trying to take care of her medical bills for you, you're trying to take care of her banking for her, all of a sudden she passes away, that power of attorney is no good. Now you have to go down to the court, you have to pay a probate fee, which is about $300. Then you have to hire somebody to administer the estate if there is one, which could run you about $3,000. You have to wait for this money to be allocated to you over about a 3 or 4 month period of time. And that's because they didn't have a trust. So if you have a will, wills are good when you're dead, but not until then. If you have a trust, on the other hand, the minute somebody passes away, the assets are transferred to the heirs. There's no cost, no fees, and it's a lot simpler. So much simpler. Yeah.
I tell you, you really got to stay organized with all this stuff. You really do.
You do.
It's time to get your files in order.
Yep.
And get organized. What do you think, Dutch? You better get organized back there.
I think I should have got organized a long time ago because you're talking about $5 million. I'm like, well, guess my $20 savings bond is going to be safe then.
You're good to go, buddy. You're good to go.
Devin, what do you think about all this tax talk?
Have we been talking about taxes
Yeah.
for the past hour?
Yeah, right.
I had no idea.
Yeah. Well, I wanted to get you back in because I want to learn a little more about you and your background, and have some fun hot talks. You guys got to promise to come back in soon.
Absolutely.
All right.
Yeah.
Sure.
All right. Well, we're about out of time, Bob. Give out your contact information now. What all are your services there? You do taxes, obviously,
Right.
tax returns.
Right. We do
probably
tax returns.
Accounting, payroll.
Right. We do accounting, financial statements. We do payroll services for small businesses. We actually help people set up corporations. We help people with trusts or wills or powers of attorney, promissory notes.
Now,
we do
what
a
if
lot.
someone's buying a business and they're like, I need an accountant to go in to make sure the books aren't cooked or
Yep.
something like that?
Yep.
Do you do that kind of thing?
We do. It's called forensic accounting, and we actually do that as well. We even help people with financial planning to help them decide how much to save, where they should save it, how they should invest their money. We do all that. We don't sell any products. We don't sell securities or anything like that, but we actually help people with their planning.
Okay. Sounds good. Well, give out your contact, your website, phone number, and all that good stuff.
The website, again, is taxquest.com, TAXQUEST, taxquest.com. Our address is 6232 North 7th Street, Suite 110, Phoenix, Arizona, 85014. The phone number, 602-264-9331.
Very nice. Well, hey, give Robert Hockensmith, CPA, a call. And I tell you, you're very knowledgeable.
Thanks.
So if you want to have somebody that's knowledgeable doing your accounting and tax work,
Thanks.
you're the man to call. I got to tell you.
Since Devin doesn't practice alone, I guess I'll be the one who has to, right?
Yeah, right. All right. It's been fun, everyone. Bob, thanks for coming in, man. It's been a lot of fun.
Thanks, Pat.